Assalamu alaikum friends, welcome to question number 3 of March-June 2021. So we are going to go through scenario 3, which is for 25 marks question. As you can see by just going through the exhibits that there are 2 exhibits. That means this question is a short question, right? You don't have much exhibits to go through. So we can finish this quickly, okay, compared to the previous 2 exhibits because we had so much of exhibits to read. This one, the reading part we can finish quickly. Okay, so let us read the information that is there on the page given to us. It is at 1st of July. I hope you can see. Okay, let me zoom this. It is 1st July 2005. You are the manager in birth and company, a former chartered certified accountant responsible for the audit of mating company for the year ended 31st March 2005. All this are always repeated, right? So you can quickly read it. The following exhibits are available on the left hand side of the screen, provide information relevant to the question. Number one is audit completion review, and the second one is about the update and the draft of the auditor's report. So what does exhibit 1 provides? Provides details of matters which have been brought to your attention by the audit supervisor, and number 2 provides an update on the outcome of the initial discussions with the client and the details of the auditor's report, which now has been drafted by the auditor supervisor. So your question number 2 and 3, they are more on audit completion and all, like audit report, audit evidence, what are the attentions that have been brought to you, all those things. But when for the question 1, which is for 50 marks, it's more like on planning, initial stages when you're planning the audit, those stages. Okay, so now you guys, you must have got an idea in AAA how the questions are in section A and section B. Okay, so now let us go to the requirements first. So these are the 3 requirements. Okay, no, there are actually 4. Okay, from part A, using the information exhibit 1, that means for requirement A we have to use exhibit 1. It's very clear. Comment on the matters to be considered. What are the matters that you have to consider, and explain the audit evidence. You need to do 2 things here. One, you have to comment on the matters. Second one, you have to explain the audit evidence. You would expect to find during your review of the audit working papers on 1st July 2005 in relation to the issues identified. So when you're explaining the audit evidence or the matters, you have to be very specific to the issues that has been given to you. First one is railway operating license and going concern. There are 2 things. One is about operating license, the other one is going concern. Number 2, purchased customer list and the chairman's statement for 5 marks. 7, 8 and 5 marks. Coming to requirement B, with reference to exhibit 2 and assuming that no further adjustments will be made. Okay, no further adjustments will be made to the financial statements in relation to the railway operating license or the chairman's statement. Evaluate the appropriateness of the draft auditor's report. How appropriate is the auditor's report, the draft auditor's report produced by the audit supervisor? You have to comment on the appropriateness. Okay, and it's worth for 5 marks. So now let us go to the exhibit in detail. Exhibit 1. So I'm going to go through exhibit 1 and then I'm going to cover my requirement A. Exhibit 2, I will read it later when I have to answer my requirement number B. Okay, so audit completion review. I hope it's clear. Okay, it's a little blur, guys, I can understand, because when it was taken at the screenshot, it was like this only. Okay, so Matley Company is a listed transport company which provides train and bus services for the public on a national basis. The audit of Matley Company for the year ended 31st March 2005 is nearly complete, and you are reviewing the audit working papers. Matley Company is a new audit client. New audit client for Beth and Company this year. The previous auditors issued an unmodified opinion on the financial statements for the year ended 31st March 2004. Matley Company's draft financial statements recognize revenue. Okay, so how much is the revenue? 60.1 million. Remember, guys, whenever some figures is given to you, you should always make use of those figures in your answer. Sometimes you might have to calculate ratios also. You definitely have to calculate some in percentages, what is the change, what is the increase, decrease, like that. Okay, so revenue in 2005, but in 2004 it was 94.3. Did you see the revenue fell down? Next, profit before tax was 10.5, but it was 22.1. It fell very drastically, it fell. And what about the total asset? You are given these three things because materiality, when you have to see, you will be seeing regarding the revenue, profit before tax, and asset. So asset was 28.4, but in 2004 it was 31.1 million. Did you see everything is falling down? Your revenue fell down, profit before tax fell down, total assets fell down. This shows that something is not going right with the company. So that's why the audit supervisor has brought the following matters to your attention. Okay, when you're writing the requirements, answering requirements, you have to answer the requirements in the following order. Okay, so these are the three issues. Number one, railway operating license and going concern. So MATI company has operated a national railway service for last 19 years. This shows that they have tons of experience in the sector. The MATI company. MATI company's national railway operations has been subject of adverse publicity over the last 12 months. This is an issue in relation to the unreliability of its services. Why this adverse publicity? Because they are saying that services are unreliable, including the late running of its train. That means trains are running late. They're not going on time. Next, the license to operate the national railway is put out to tender by the national government every 5 years. Okay, and they have been operating since last 19 years, but after every 5 years the tender will be put out by the national government. So MATI company's existing license is due for renewal on 28 Feb 2006. Right, the current tendering process is approaching completion, and despite the recent operational problems, MATI company was informed on 30th June 2005 that the company was the government's preferred option. So this was on the understanding that the company would address the recent criticisms of its poor service levels. That means government is going to favor MATI company over the other companies. Why? Because they were assuming that the company would address whatever the criticisms they are currently facing, okay, regarding its poor service level. So the company was also informed that the tender would still be subject to a detailed review of 1 month's time prior to it being awarded. Okay, it still will be under detailed review for 1 month. The National Railway generated 42 million of revenue in 2005 and 47.2 million, and contributed to the pre-tax profit of 11.2 million this year and 13.3 in the previous year. You should be able to link this revenue from this project, from this railway operating license to this one, and also the profit before tax to this which is given to you. You see. So before we go to the purchase customer list, it is my habit that I always solve one issue at a time. I read it and then I solve it and then I go and start reading the next issue rather than reading everything and becoming confused. Because if too much information is there, then you become confused which one is for what. So the other two issues, the purchase customer list and the chairman's statement, I'm not going to read it now. I'm going to first work out on this one. Railway operating license and going concern. Okay. So before we go that, let us first go to the marking scheme to show you the points. It is, I guess, for 8 marks. Okay, we'll see the number of marks. It's for 7 marks. So how are you going to get the 7 marks? If you see here. Okay, so generally up to 1 mark for each matter explained and each piece of evidence recommended. You have to explain the matter as well as the evidence. Okay, in case you forgot the requirements, let us again go back to the requirements. Okay, what did the requirement say? Matters to be considered and also explain the audit evidence that you would need. So you have to explain both this for all these three. Matters, evidence, matters, evidence, matters, evidence. Like this you have to divide. Okay, so you have 7 marks. So now you have to decide how many points are you going to write for evidence, how many points you are going to write for the matters that has to be considered. For example, let's say you are writing 4 points. for matters and 3 for evidence, or it could be 3 for matters or 4 for evidence. Okay. Same for the other two also. So before I straight away go to the answer, I will take you to the marking scheme, because the marking scheme will tell you how you led to that answer. When you're planning also, make sure that the point should come in your mind first, because then only you can build up on those points. Okay. So if you see, tons of matters are there. This is regarding what railway license. These are the matters, these are the evidence. You don't have to write all this, because the maximum mark is 7 only. So if you see 1, 2, 3, 4, 5, 6 matters are there. And if you come to explain the evidence, 1, 2, 3, 4, 5, 6, 7, 7 are there. So total 13. We don't need all these points. So make sure that you only write 7 points. And guys, when you're dividing between two things, for example, matters and evidence, how many points to write? See, it should not be like this, that you're writing 7 matters and no evidence. It's not a good strategy. Neither if you're writing 6 here and only 1 here. That's not good enough, because evidence you're writing 2 less. So make sure that it's equal. You're writing 50-50, right? For example, 3 and 4 here, or 4 or 3 here. This is a good ratio. So when you're dividing it, because 7 is an odd number, so if you divide it by 2, it will be 3.5. Come on guys, 3.5, 3.5. Okay, so rather take this as 3 or 4, or take this as 4 or 3. Okay, rather than taking more for matters or less for evidence, or less for matters and more for evidence. Don't do that. Okay, keep that balance. So let us go to the matters first. What are the matters that you need to comment on? Okay, management should disclose material uncertainties. An auditor should assess the adequacy of this disclosure, how adequate the disclosures are. This is a matter. Okay. Number 2, significant uncertainty exists over a renewal of license. You see, you should be able to pick these points while you're reading the case study, the scenario. But in your answer, you cannot write like this. You cannot write answers like this in bullet points. You have to explain it in a well-developed paragraphs. Third, materiality of National Railway contribution to revenue or profit. How much the National Railway contributes to the overall revenue and profit. Is it huge or is it less? That you have to discuss. Next, without a National Railway license, company would be loss making. You see, because huge amount of revenue comes from this. If that revenue is also not coming, then the company would be loss making. Then company has deteriorating performance. Did you see all the assets, profit before tax and revenue, they were falling, and the percentages you need to find out, okay, while you are answering. But you know it is falling, declining revenue, profit and assets. We just saw. Company may be unable to review the capex and maintain liquidity. Okay. So all these are matters. Matters means when you are writing, remember guys, when you're writing any matters that needs to be discussed, those matters have to be significant, okay, of significant nature. If your revenue is falling by 1%, okay, that should not be written under the matters. But here the fall is much bigger. That's why we are mentioning it under matters. Don't write small things under matters. Make sure then if you're writing something under the matters, is it significant? Then you put it. How will you know whether it's significant or not? Anything that affects your going concern, anything that can make your profit making into a loss making, okay, anything that leads to some uncertainty in the future. So these things needs to be put under the matter, like in this case. Okay. Then we went to the evidence. What are the evidence? Evidence also we have so many. Okay. A review of the press report. You can check the press report. You can review the press report in relation to the late running of this train. You see, to this evidence, this is a hard part, guys. Matters, okay, it is easy. You can understand from the case the profit is declining, revenue is declining. If there is uncertainty of existence, but evidence part is tough. You need to use your professional judgment here. You must have studied all the evidences under audit. But when you're writing this, you have to link this to the case study. Okay. So here, this is about a train, a railway service. So what can you rely on? What are the evidences that you can use? Number one, press report. Review of the press report in relation to the late running of medical company's train, and also the quality of the service to assess the seriousness and the significance of the issue. All those things, where will you get it from? The press report. So that's the evidence source. Number two, a review of any corresponding files between MATI and the Government Transport Department. You see, will you get these answers from the textbook? From your knowledge, will you get these answers? No. From the case study only. Okay. So it's a review of a correspondence between both of them, the government and the company, in order to identify any developments in the license. Why are you doing it? So that, guys, don't just write the source of the evidence. Don't write press report. They should review press report. They should review this. They should obtain this. They should review this. Don't just write review, obtain, obtain. Don't write these words. You have to write the reason why you are using it. For example, the first point, wait, let me erase this. For example, the first evidence you are writing, you told review of press report, but you are explaining why. To assess the quality regarding the in relation to the late running of the train and how serious and significant it is. So you are explaining the reason for that evidence also. Why you need it. For what. So you have to do this for any evidence. Okay. Any question, any evidence, you always have to explain the reason for that. So a review of correspondence. Why? In order to identify. So this is the reason. You have to give a evidence reason. In order to identify any developments in the license. Who will be giving you the license? The government, right? So there should be some review of correspondence between these two that you should have, that you should be reviewing. Because then only you can identify what is the status of the license renewal, whether there any development is there or not in the license renewal process, and consider their impact on the likely renewal of the license. Through this, you can understand how likely the license is going to be renewed. Number three, all these things requires creative thinking. Okay, you cannot answer it from your knowledge, trust me. It should be a combination of your knowledge as well as your thinking. So notes of discussions held between the auditor and the management. Try to bring, when you're thinking of evidence, guys, best way, think of who are the stakeholders and their relationships. For example, the government and the company. So what could be the evidence? Their review of correspondence, the correspondence that they have, the correspondence files. Then the press and the company. Then the auditor and the management. Okay. Then the company's board minutes of meeting, then the company's cash flow budgets, the company's bank statement, written representation from management. So all these things you can use as evidence. Think of the parties who are there involved. Then it's easy for you to get the evidence. So next one is between the auditor and the management. Notes of discussion. What were the discussions that were held between the audit and the management? Why? In order to any contingency plan, if the company fails to secure the national railway license, what are their contingency plans? Do they have it? So that you will get from the discussions with the auditor, what they have discussed with the auditor. Now they are explaining with example. For example, any other license opportunities which may exist in the market. What are the examples? It's like a backup plan. For example, do they have any other opportunities that are there in the market that may give them license, or any other license that they can take? And any emergency sources of finance, do they have it, which might be available to the company? So it should not be that they are relying solely on this contract, this license only. Okay, do they have any other sources of license or any other sources of emergency fund? Number 4, a review of the company's board meetings for evidence. of management discussion. Okay, this is the best evidence. This most of the time you can use for any company. Review of the company's board minutes. Why? To get the management discussion of the status of the tender process. What is the status of the tender process? You will get this from the minutes, board minutes. And also any contingency plans, do they have it? Number 5. A review and analysis of the budget and cash flow forecast. This is another area of evidence. This also you can use for almost many companies. Their budgets and their cash flow forecast. By whom? By the auditor. In order to assess the ability of the company to survive as a going concern, you need to look for this and to see whether they can continue for the foreseeable future or not. 6. Copies of the company's bank facilities. Because finance is also important, so you have to look at the bank, the company's bank. So obtain the copies of it. This has to be reviewed. Why? To assess the feasibility of the company's ability to operate with them. Should they be unsuccessful in winning the contract? If they are not getting the contract, okay, what is the company's feasibility in dealing with the bank? Are they operating with the bank facility? That you have to see. And number 7, written representations. This is also a very evidence that you can use in almost many answers. In relation to the status of the tender process again. And also the management's expectation of its expected outcome. You see? So let us now go to the answer and see. So when you're writing it, how are you going to write it? First of all, matters and evidence, 2 things. It is relating to this railway operating license. You need to write this, and then you need to write matters. Okay. So uncertainties in relation to going concern. This is a very significant matter. Okay. So if anything is regarding going concern, which standard are you using from your SBR? It is ISO 1, IS1. IS1 talks about going concern. Okay. So IS1 requires management. What does IS1 says? It requires management. Basically, according to the standard, you are giving the responsibilities of the management. The SBR standards are for the management and the auditing standards are for the auditors to follow. Okay. So IS1 will be for the managers to follow. What are their responsibilities in this case? What should they do? So IS1 requires management to disclose material uncertainties regarding what? Going concern. Regarding going concern. And ISA 570. This is for the auditor. Okay, auditor's responsibility will be in the auditing standard, which is going concern. This also talks about going concern, but from the auditor's perspective. So this requires the auditor to assess the adequacy of this disclosure. Auditors have to check how adequate the disclosures are. Auditors just cannot blindly accept whatever the disclosures management are giving you. You have to assess that adequacy according to ISA 570. Okay. You should make the use of the standards, SBR standards as well as auditing standards in your answer if you want to get the maximum marks. Therefore, okay, now you're explaining this. You have explained the duties of management as well as the auditor. Now next what? So therefore, the principal matter raised by the unresolved status of the license tender is the potential and impact on the betting company's financial performance and the financial position if the company is unsuccessful in the tender process. So you are telling, what if they are unsuccessful? What could be the impact? Okay, so this is a principal matter. That means very important matter. So because of this matter, what could be the impact on the performance as well as the financial position if the tender process is unsuccessful? Okay, so because of this, what happens? It creates uncertainties. It creates uncertainties in relation to going concern because you don't know, you're not certain whether you will get the tender process or not. And this tender has a huge impact on your revenue and profit before tax. It can make you loss making. Just now we saw in the marking scheme, right? We didn't still calculate the percentages, but we know that huge amount of the revenue is from this process. So if this tender, if we don't get it, then it's going to have an impact on our going concern. Okay. And when is the license due for renewal? On 28th Feb 2006. If you check it from the reporting date, it is 11 months from the reporting date. 11 months. And therefore, it is within the foreseeable future also. It's not something after beyond 12 months. It is within the 12 months period. So you can foresee this easily. So for the purpose of going concern review, this is a foreseeable future. Okay. So although the company has been informed that it is the preferred bidder, remember this is from the case you have to talk about the facts that even though they know that government is preferring them, but still there are doubts, significant doubts are there, okay, as to whether the license will be renewed given the government's requirement. What were the government's requirement? That they will renew based on what? That the company addresses the recent criticisms and the pending review in 1 month's time. If they do it, then only government will give them the tender. But there are doubts about that also, whether they can address those issues or not. What if they are not able to do it in 1 month time then? So when you're writing answers, don't just write doubts, write significant doubts. Okay? Use adjectives to sound it like very significant, very important. Next paragraph, we are calculating all the ratios and all. What's the impact on the revenue? What is the impact on the profit before tax? What is the impact on the asset? Okay. So the revenue generated. So first paragraph, this paragraph talks all issues regarding to uncertainty, going concern and all. Second, we'll be talking about impacts of numbers. What's the impact on the revenue, the profit before tax, assets and all those things, okay? And then we'll comment on it. So the revenue generated from the National Railway Service represents 66.9% of Metro company's revenue for the year. 66.9%. Is it given? No, they didn't give you the percentage. You had to find out this percentage. What did they give? Okay, just okay, you need to go back and see here. What was the total profit? We'll do it, we'll calculate it here. It was 60.1. Out of this, for this one we have 40.2. So what is the percentage? It will be 60.1 minus 40.2 divided by 60.1, right? How much it is? Let me calculate it. 60.1 minus 40.2 divided by 60.1. So I'm sorry, not the change. You're just taking the percentage, right? It's 40.2 divided by 60.1. Okay. So which is 66.9%. 66.9% if you take it. Out of the total revenue, 66.9% is for this one. It's a huge amount. Right? You see? It represents 66.9%. Make sure that you have these percentages in your answer. Okay, and why are you calculating these percentages? To link this to the materiality, to show that it's material. And don't just write material, write highly material. Okay, it is highly material to what? To the company's statement of profit or loss, because revenue you recognize here only, no, for the year, and also it's very critical to its operation also, because without this company will be loss making, so it's very critical. It is also significant that the National Railway, now we are talking about the profit before tax. Once you are done with revenue, next line, profit before tax. So it is also significant that the National Railway Service contributed profit before tax 11.2 million. If you are calculating this in terms of percentage, same how we have done for the revenue, it will be 106.7% of this year's profit. 106.7%, even more than 100%. So what does it mean? That without this contribution to the company's profit this year, the company would be loss making because it's more than 100%. If this is not there, company will be loss making. You have to use these terms, you have to write this in answers because they are very significant. So in addition to this considerations, even with the inclusion of the National Railway license in this year's result, okay, even after considering all these things, even after including this National Railway license in this year's result, what happens? Still their performance is deteriorating. Still Metis company's performance is deteriorating because we saw there's an overall decline in the revenue, the profit before tax, the asset, because there's a declining revenue. It is evidenced by its declining revenue. You see the terms that they are using. By how many percentage? 36.3%. Write it in terms of percentage. Don't write it decrease from here to there. Percentage shows the how material it is, how significant it is. And profit before tax, how much it fell down? It fell down by 52.5%. And what about the company's asset? It fell down by 8.7% from the previous year. So all these are indicative of what that the business is struggling to renew its capital expenditure and maintain its liquidity, hasn't it? Now, so all this were matters that you have discussed. Okay. Now coming to the evidence. So let's say for discussing matters, you will get 4 marks. 2 for this and 2 for this. Okay. Now evidence. So that means you can write 3 evidence. But if you're writing like if they will be giving you one mark for each, then you can write here 5 evidences. So it depends on how many matters that you have wrote and then how many evidence you have to write. Okay, balance out so that you get the 7 marks. Coming to the evidence. Evidences you can write in different paragraphs. Okay, because evidences are short, you can write in 1 line also, 1 or 2 lines. We have read most of it in the marking scheme also, right? So I don't think that I have to go through the answer again because it's just a repetition of it. Review of the press report, review of the correspondence file. Okay. So all these things are repeated from the marking scheme, so there is no use of reading it. Now we are coming to the second, which is purchased customer list. Same way, matters we are explaining, and then we are going through the. So there are so many matters. There are 2 matters here. If you see here, okay, this had just 1 matter, going concern. Okay, but here they have 2 matters. One is assessment of useful life, one is impairment review, because this is an intangible asset. You need to identify what is it, intangible asset. So there are 2 matters here and then evidences. So that means 2 marks for matters and the balance is for the evidence. But before that, we have to read the exhibit. We didn't go through that. It is in exhibit 1 only, purchase customer list. What happened? So make sure that always you understand the first requirement very well, because once you understand that, the rest all is just the repetition. It becomes easy for you to understand that you have to write matters, evidence. If you answer the first part well, railway operating license and the going concern, you will understand the second and third also. That is the same way that you have to write. Okay, purchased customer list. This is an intangible asset. So on 1st of April 2004, Medi paid 6.9 million to acquire the customer list of Jay's Coaches, a business which was terminating its operation. Jay's Coaches hires out coaches and drivers to private and public sector customers. Its customer list includes many highly reputable listed companies and highly reputed listed companies, and government bodies with a customer relationship and trading history going back more than 30 years. That shows it's very significant. Okay. On the basis of this trading history and the associated customer loyalty, the management of Melty assess the useful life of the customer list as indefinite. The draft statement of the financial position recognizes the customer list as an intangible asset at the total carrying amount of 6.9 billion. In the second half of the reporting period, however, two of the JSS coaches largest clients moved to a new competitor. See, the management of the Meti believes that while it would be difficult to identify a sales value for the customer list at the reporting date, it was difficult to identify a sales value for the customer list. At the reporting date, they estimated the value in use of the customer list to be 7.2 million. So now same way we are going to go to the marking scheme to understand this. That means you have to talk about issues relating to what? Intangible assets. Because it is intangible assets. Once you identify, the main thing is easy for you to understand the issues, the matters that has to be discussed, as well as the evidence that you need to collect. So, but before going to the main answer again, let us go to the marking scheme. So this is regarding what? Purchase of customer list. So here we have all these matters. Okay. These are the matters. One is materiality of the customer list. How material? See, matters, if you have to talk, you always have to talk about the materiality of anything. It could be an asset, it could be an intangible asset, it could be a liability, but what is the materiality of it? Okay. Next, accounting rules for intangible assets with indefinite life. Because you told us indefinite life, what are the rules for intangible assets? That is a matter. Third, what is the significant judgment? Assessment is a matter of significant judgment and also high audit risk. Because it's an intangible assets and also with an indefinite life, this is a very risky area, which will lead to high audit risk. Okay. And this area you need to use significant judgment also. So this also comes as a matter. And also indefinite useful life must be substantiated. You just cannot say it's indefinite useful life. You have to justify it. You have to give evidence, right? Must test intangible assets with indefinite useful life annually for impairment. If it's for indefinite useful life, you still have to test it annually for the impairment. And if you have to test it for impairment, you have to know the accounting rules for impairment review as well. Okay. Possible manipulation by the management to avoid the impairment loss, right? There could be manipulation. Next, losses of the two major customers to the new competitors. So because of this, this could be a possible impairment indicator. That means value of an intangible is going down. If the recoverable amount is less than the carrying amount, what happens? Impairment loss should be recognized in P&L. Now coming to the evidence. Okay, evidence. Oh God, there are so many evidences are there. You definitely don't have to write so much of this in your answer, but let us just go to the evidence. A copy of the, so most of the time if you see the evidences, what is it? Copy of, review, discussion, representation letter, all those things. Okay. So copy of the purchase agreement. This is an intangible asset. So you need to see the purchased, when did you purchase it, at what amount. Okay. So a copy of the purchase agreement to identify the details of the accusation. Why you want the purchase agreement? To know the details of the accusation. What are the things you need there? What are the details? You need the purchase consideration. How much did you purchase it for? What are the assets that you have acquired? At the date of the acquisition, agreed to the detail included in the accounting records. Are they agreeing with the details that are there in the accounting records? Number two, the carrying amount was 6.9 million, right? So the agreement of the purchase consideration of this one to the company's cash book and bank statement. You will see it. Are they matching with the cash book and the bank statement? To confirm the purchase price. Third, review of their trading history. Just coach's trading history. And also any market research which has been performed on the ability of the purchase customer list for evidence of how it will generate. So you are performing, right? You are performing a market research Why? To see the ability of the purchase customer list, whether they can generate future revenue or not for the Meti company. Because there is no use if you are taking an intangible asset such as purchase customer list and you're not having a revenue in the future. You have to perform market research to know that. Next, a copy of the client's schedule. Why? Because you have to calculate the value in use. Because this was given as 7.2 million. So you need to calculate this and also confirm it with the schedule's mathematical accuracy, whether it is accurate. Next, so with intangible comes review of impairment loss, all those things, okay? Review and assessment of the company's cash flow forecast. This we had for the first one also, railway services, okay? Because through cash flow forecast, you will know whether this 7.2 million is correct or not for the value in use calculation. Okay, you can use this as a support for the amount value in use. How do you calculate value in use? Through cash flow forecast only. Okay, next, again a discussion with the management. You see, this is used very commonly. This, some types of evidences are very commonly used, that you can use it almost in any answer. Some, not always. For example, discussion with management, having a written representation. These things are very common. Review of the cash flow forecast, budgets, these things are common. Okay, but these things are not common. Review of their trading history, then a copy of the purchase agreement. These things are not common. It is specific to the case study. So a discussion with management in relation to what? On the basis of the calculation. How did they calculate the value in use? You have to discuss this with the management. And also how the auditor has assessed it. The assessment of the auditor of the reasonableness of the management's key assumptions. Did the auditor assess that the management's assumptions are reasonable or not? That also have to be taken care of, right? Sensitivity analysis. This is a new type of evidence. Whether sensitivity analysis has been performed by whom? The auditor. Why? So that they can see under various conditions whether the value of use changes or not materially. So bearing this key assumptions, they change the key assumptions and they assess the materiality and see what is the impact of those changing in assumptions on the calculation of the value in use. Okay. A review of Meti company's management accounts for the reporting period. You review the management account. And for the post reporting date period to date in order to identify and quantify the cash flow generated by JS company's customer list. What was the cash flow that JS company has generated? And also whether there were any significant variances that were investigated or not, because variances and all, where will it be investigated? In management accounts. That's why we're using it. Discount rate, don't forget the discount rate. In value in use, because it's a focus of cash flow, we have to use discount rate. So what the comparison of the discount rate used in the value in use calculation to published market rates, you're comparing it whether it's too low or too high. And also the notes of discussions with the management in relation to what? On the basis of any adjustments made by the management in order to ensure that an appropriate rate has been used. If they have made any adjustments to the rate that they have used, what were the discussions with the management? The notes of discussions with the management needs to be obtained by the auditor. Then written representations. This is a very common evidence. Written representations from managing confirming what? That to the best of its knowledge, the assumptions used in the calculation of values are reasonable. That means whatever the knowledge they have, according to that, they have tried their best, okay, and they have used all the assumptions in calculating that value in use, and they are saying it's reasonable. They are confirming that it's reasonable and appropriate, and that in its opinion the purchase customer list is not impaired and the carrying amount is fairly stated. You're taking that representation from the management that they say it's correct. There is no impairment and carrying amount is fairly stated. So if you go through the answer also, this the evidence section we are not going to read because it's just a repetition of what we have read from the marking scheme. You see, so it's just the repetition from the marking scheme. We are not going to go through it, but we are definitely going to go through these two matters: assessment of useful life and impairment review. Very important. Why these two matters are important? Because useful life has been taken as indefinite useful life. This is a very significant matter relating to intangible assets. You should know it. If it was finite, then it's okay. Why? It's a significant matter because if it is taken as an indefinite useful life, okay, according to IS 38, we don't amortize it. So because if we don't amortize it, we are not recording an expense. That means our profit will be overstated. So that's why you need to be very critical when an entity says that it has an indefinite useful life. That's the reason it comes under matters. If it was a definite useful life, then it might not come under matters because it's not so much important. Because if it is indefinite, then yes, because finite normal way we calculate amortization and all. But yes, if it's indefinite, then it's not amortized, but we have to do annual impairment review for that. That's why the second matter is impairment review. Okay. So assessment of useful life, let us go through this. Okay. The carrying amount. Now first we start with the carrying amount. Okay. The carrying amount of the customer list purchased from the GS company is highly material to Matic company's draft statement of financial position at 24.3% of the total asset. What was their carrying amount? You have to take that out of the total asset because this is also an asset. It's an intangible asset. So out of the total asset, what is there? Asset. Okay, let us do that. The total asset was, just a minute. What's the total asset? 28.4. So out of that 28.4, they have 6.9. 6.9 out of 28.4. So in terms of percentage, how much it will be? 6.9 divided by 28.4. 24.2 something, right? It is 24.29, 24.3%. You see, you need to calculate that. 24.3% is this. So which shows not highly material, but it's material. Okay. I'm sorry, it is highly material, yes, because it's more than 5%. Okay. So which standard are you using? Immediately start using the standard. It is IS 38, intangible assets. According to IS 38, what should the entity do? Remember, accounting standard, okay? The standards that you have learned in your SBR or financial reporting are relevant from the job for the role of or responsibilities for the management. And the auditing standards we are using for the role of the auditor to say that auditor should do this, do that. Here we are saying what the reporting entity should do. So they should recognize intangible assets at what? Initially, they have to recognize it at cost. And then they should assess whether the intangible assets useful life is finite or indefinite. Okay. So here, an assessment of useful life has indefinite is only appropriate if on analysis of all of the relevant factor, there is no forcible limit to the period over which the intangible asset is expected to generate net in cash flows for the entity. After you have taken all the relevant factors and you decide that you cannot foresee the time, the limit to the period, then only you can say it's indefinite useful life, otherwise you cannot. And remember, this assessment, it's not easy because it requires significant level of judgment is required in this field. So your judgment only that has to be exercised. And the subjectivity of the carrying amount creates, because it's subjective, anything of subjective nature in audit is high risk only. Because there's no evidence to prove it. How you got that amount, it is totally on your judgment only. So subjecting of the carrying amount creates high level of risk of the auditor, high level of risk for the auditor. So in this case, you have to link this to the case study. According to the case study, do you think it's a high risk or not? So in case you link this to the trading history, because the trading history will tell you whether the risk is high or not. In this case, the trading history of chess coaches before the accusation by Matty company. This may provide some evidence that there is no forcible limit to the period over which the purchase customer list can be expected to generate cash flows. But however, this assumption also needs to be assessed carefully by the auditor. Okay, and intangible, finally, you are giving a conclusion. Intangible assets with indefinite useful life should not be amortized according to IS 38. You don't amortize it, but impairment review, you have to do it. That's why the next matter is impairment review. So IS 38 also requires, now we are talking about impairment review. What does IS 38 says on that? It requires the reporting entity to do what? Test the intangible assets with indefinite useful life annually for the impairment now. So how are you doing the impairment? You are comparing the carrying amount of the asset with the recoverable amount. But don't write in general comparing carrying amount of the asset with the recoverable amount. No. Link it to which asset? Link to this case study. So this impairment review would involve comparison of the carrying amount of what? Customer list. Okay. Carrying amount of the customer list to its recoverable amount. Which, okay, and it's hard to find out. Why? Because which, given the difficulty, there was a difficulty in identifying a sales value for the customer list. That means finding the recoverable amount is hard in this case. They couldn't predict. So given the difficulty in identifying a sales value for the customer list is likely to be based on an assessment of its value in use. So the recoverable amount we know is higher of fair value less cost to sell or value in use. Fair value less cost to sell we couldn't predict because the sales value we couldn't predict for the sale of the customer list, but value in use is given. So we definitely have to take that value in use only now. There is no other option. So the assessment of value in use, even this value in use that you are taking is highly subjective. Okay. Matters means you are talking about issues, problems, risk. Okay, when you're using something. That's the meaning of matter. So the assessment of value in use is also highly subjective. That means you have to estimate what future cash flows of the entity expects to derive from the customer list. And expectations about possible variations in the amount also, or the timing of these future cash flows and the time value of the money represented by the current market risk-free rate of interest. You also have to check whether the discount rate that you're using is appropriate or not. That also you have to check. Because amount might change based on that. Okay. These are definitely a little bit lengthy answers to write so much, but you definitely want to understand it, and you know the answers will automatically flow. You will know how to write it, provided that you know these things. That it considers so many things. Value in use. It talks about discount risk, discount factor. Then it talks about the cash flow, right? And it talks about the subjective nature of value in use. If you know all those things, you will be able to write it. The point is you have to know it first of all in the first place to write it. Because writing is not a big thing. Knowing the correct thing is the big thing. So what was the management's assessment of value in use? It was 7.2 million. And if you see this 7.2 million, it appears to be very close to what? The assets carrying amount of 6.9 million. So so you can assume that this is more likely to be a fair value because it's very much close to the carrying amount also. But it is possible that the management may have manipulated its assumptions. They can, right? Why? To avoid the recognition of an impairment loss. See, any entity might want to avoid the impairment loss. Why? Because it will reduce your profit. Impairment loss you record in the profit and loss account, it will reduce your profit. No one wants to recognize that loss. So they might make such assumptions so that they don't have to recognize this impairment loss. That means the recoverable amount they might increase it beyond the carrying value. For example, in this case, if you see, it's more than the asset value. That means there is no impairment. Okay. So because of this, what should the auditor do? First, you are talking from the point of the company, what they should do, how they should recognize. Okay. Then only you will talk about the auditor. So here, the auditor should then carefully review and consider the management's assessment of the value in use. How did they calculate that value in use? You have to assess that as an auditor. And also the assumptions that are used in these calculations. Wherever there are some subjective, some judgment that you have to use, you have to talk about assumptions in your answer. Okay. Now, in addition to these considerations, there was another issue. What was it? New competitor. There was an emergence of a new competitor. So you have to talk about this also, but in a separate paragraph. Okay, make sure that they are in separate paragraph. Just see. So which is capable of taking major customers, because this competitor is capable of taking major customers from you away from the just cause and the loss of the two key customers. So because the loss of two key customers, what are they? They are the indicators that the intangible assets may be impaired, because the value of your intangible asset will then go down. That means impairment in the market, right? So if the recoverable amount of the intangible assets are therefore less than their carrying total carrying amount of 6.9 million, okay, then there is an impairment loss, and this should be recognized where? Profit and loss. And then intangible assets should be written down accordingly. From your intangible assets, you have to deduct that impairment loss. Okay. So evidences, we went through the marking scheme. We are not going to go now. We are going to go to the third one, which is chairman's statement. Here also we are going to go through the matters and the evidences. But before that, we have to read the exhibits. Okay. Many companies draft annual report includes a performance review written by the company's chairman, from which the following extract has been taken. It is always a pleasure for me to associate with such a stable and high performing company. Stable and high performing company. During my tenure as a chairman over the last 5 years, the company's business has grown each year and has produced an ever improving return for our investors. It shows that they are highly optimistic. But that's not what's actually happening if you see, because your revenue is declining, profit is declining, asset is declining. The audit working papers include notes of a discussion with the company's finance director, in which he comments that the chairman's performance review and maintains that everyone understands that it is the chairman's role to promote the company with a positive. It is the chairman's role to promote the company with a positive narrative. That's what everyone understands. Which is for 5 marks. So here you have to write less than the other two issues, because this is for less marks. And less matters also you can discuss relating to chairman. So here we just have one matter. What is it? Duty to review the other information. We'll go to the marking scheme first. So if you go through this, what are the matters? Auditor has a duty to review other information for material inconsistencies. Not only the chairman's statement, it is their duty that they have to review the other information as well, apart from the chairman's statement. Okay, you just should not rely completely on the chairman's statement and not look for that information. No, you have to. Second, chairman's performance review contains apparent inconsistencies. Exactly. They told that they have been performing well, profit is growing, but it's actually not happening if you see the revenue, profit, and so there's an inconsistency. Next, discussion of inconsistencies is 2 marks. Okay. That means you are linking this to the revenue and all, you're talking about it, then you will get 2 marks. What about the finance director's comment? Whenever some comment is there, make sure that you bring this in your answer. Okay, you'll be giving extra marks for it. 1 mark, 2 marks will be getting for that comment. So here, finance director's comment is inappropriate in this case. Chairman's statement should be objective. What was their why were their comment inappropriate? What was their comment, by the way? That chairman should always give positive narrative about the company. It is the chairman's duty. It's wrong. It's inappropriate. It's not the chairman's duty to always show in a positive, right? Even if the company is not doing positive. Rather, chairman's statement should be objective. It should not be biased. If it's positive, show positive. If it's negative, show the true picture. Okay, objective. Creates doubt over management's integrity. Yes, their statement shows doubts over the management's integrity, that they are not being honest. They are unfairly showing them as a positive, in the positive light. Let us go through the evidences now. There are two evidences. Number one, what could be the evidence for the chairman's statement? Discussion with the management, notes of discussion with the management, explaining this apparent inconsistencies between the chairman's statement and the financial statements. It's inconsistent. And also, you have to requesting the amendments to the chairman's performance review. That means you are telling that amendments have to be made to the chairman's performance review and documenting the client's response. After that, you have to document what did the client do. Did they amend it, or they were not amending? Then a detailed review of all the other information contained in the annual report. Other information that was contained in the annual report, you have to do a detailed review on that to identify whether there were any inconsistencies or not. And also, if there were, then you have to investigate those issues. Okay. So evidences I have gone through. Okay, don't have to go through that, the two evidences, but definitely through the matters will go. So which standard are you going to use when they talk about other information? In auditing, it is ISO 720. The auditor's responsibility related to the other information. So according to this standard, what should the auditor do? They have a duty to review other information which has been included in the annual report. In the annual report, there are so many other information apart from the chairman's statement. Auditor have to review those information. Why? To determine whether the other information contains any material inconsistencies with the financial statements or not. In this case means you are relating this to this scenario. The performance review that has been included in the chairman's statement, it's not consistent with the financial statement. It appears to contain some significant inconsistencies, or you can say it appears that it is not significant. Sorry, it is not consistent with the financial report. In that way also you can write. Next. So they are going to go through this two matter first, and second one in the second paragraph. Okay. What is first? First, what did they told? So second, we are going to talk about the chairman's description of the performance. Second, we are talking about the finance director's comment. Okay, in two separate paragraphs. So first, the chairman's description that the matter was a high, stable and high performing company. This is inconsistent. This is inconsistent with the going concern uncertainties. Remember, in our first requirement relating to railway tender, there was a uncertainties relating to going concern. So now you tell me, if there are uncertainties related to going concern, how can the company be stable and high performing company? It's inconsistent, right? Which exists around what? The national railway license. So make sure that you write it also, going concern for national railway license, because most of your revenues rely on this, and if this license is not there, you'll be a loss making entity. So furthermore, the statement that Meta Company's business has always grown each year. This is the second statement that they made in the chairman statement. And they have produced an ever improving return for investors. This was also a statement made by the chairman only. This is also inconsistent. Now you're bringing the revenue. Just see, they told revenue is increasing, sale is increasing, and providing ever improving return. But just look at the revenue, 36.3% fall. This you have already calculated before, which you are now using it here. Now we are talking about the finance director's comment. Second, the finance director's comment that everyone understands that it is the chairman's role to promote the company with a positive and unbeaten narrative is inappropriate. Rather, their statement should be accurate and objective. And what does this statement from the finance director talks about the attitude? The finance director's attitude, okay, that it is the chairman's role to promote the company regardless of the accuracy of the narrative in his statement creates doubt in the relation to the management integrity. Right? This behavior is a doubtful behavior. You need to doubt the integrity, whether the management is integral, they are being integral or not. Because if they can comment saying that you have to show show as a positive, that you're a positive company. You have to promote your company as a positive. That means you're hiding the true picture. So this shows about your integrity, right? The management's integrity. It's a question to the management's integrity. So that's it for requirement A. We have finished all the three components, matters, and all the three issues, matters, and the evidences. Now coming to part B, which is for 5 marks, which is the exhibit 2. Okay. Again, let us go to the requirements. Okay, you're not making any adjustments. You have to evaluate the appropriateness, how appropriate their report is. This is for 5 marks, so you can write 5 points to get this 5 marks. It is now 22nd July 2005 and all matters in relation to the purchase customer list have now been satisfactorily resolved. This is regarding to the purchase customer list, okay? It has been satisfactorily resolved. Following the submission of a customer petition to the government complaining about the customer's poor service levels, on 19 July 2005, the government released a statement announcing that it has withdrawn Matic Company's preferred bidder status and was reopening the tender process for the National Railway license. It has withdrawn. Okay. Second, the company's final debtors provided details of a short disclosure notes he plans to include in the financial statements, which refers to the uncertainties in relation to the current status of the tender and the possible going concern issues which might arise for the company as a result. The disclosure note concludes with a statement that the management of Matic Company is very confident that the company will be successful in the tender process and that it will retain the National Railway license for at least a further 5 years. The draft report or draft auditor's report includes an unmodified audit opinion. So now, looking at the facts, you have to tell whether it is appropriate that it is an unmodified audit opinion or it has to be modified. Okay. And a key audit matters section which refers to the disclosure note described above and to the related uncertainties in relation to the Matic Company's going concern status. So in the key audit matters, what did they write? The disclosure note and the disclosure note which was relating to the going concern status. This was the key audit matters. So let us go to the marking scheme for part B. If you go to the marking scheme, you will get 5 points for explaining this. If you see, okay, 1 mark for each point. So when it comes to disclosure, you have to talk about whether it is appropriate or inappropriate. In this case, it is inappropriate disclosure. Why? Because the opinion has to be modified. Modified opinion due to material misstatement. There's a material misstatement, that's why that opinion has to be modified. It's not appropriate. Second, so what should be the correct opinion then? Opinion would be qualified or adverse based on the auditor's judgment of pervasiveness. Okay, you need to discuss that discussion of pervasiveness. Okay, for example, the disclosure paragraph may lack the detail. When you're disclosing it, the detail might be lacking there. If disclosures are not adequate, what should you do? Then the matter should be detailed. Okay, in the basis for qualified adverse opinion paragraph. If the disclosure is adequate, then what should you do? Uncertainty should be disclosed in separate section, such as material uncertainties related to going concern, not KAM. That means key audit matters. It should not be in the key audit matters if the disclosure is adequate. Rather, there should be a separate section relating to material uncertainties. Then KAME. KAME means key audit matters. Disclosures require this. When you are writing anything under key audit matters, disclosing anything under this, that means those are the areas which have high risk. They are the high risk areas where significant judgments are used and the effect of the significant events of transactions which occur during the period. So inclusion has this one. If you're including this because it was included under this, okay, inclusion as this one, carrying amount of customer list, management's conclusion that intangible is not impaired. inconsistencies in the chairman's statement disclosed in other information section. So this also shows that the opinion that is given should be modified. It's not appropriate. So now let us go through the answer. How did they build up the answer? So the topic is appropriateness of the draft's auditor's report, whether it is appropriate or not. Okay. You can start from the finance director. You can start in any order, okay? But let's start from the finance director. Okay. The finance director has agreed to include a short note in the financial statements to disclose information relating to material uncertainty relating to going concern. Okay. This is from the scenario only you're writing. So the note must be reviewed for completeness. So when you're writing that note, that short note that the finance director told that they are going to disclose it, it has to be reviewed, whether it is complete or not. And if the auditor assesses that the client's disclosure is not adequate, then audit opinion should be modified. Okay, because in this case, a modified audit opinion would be more appropriate in relation to material misstatement if the disclosures are inadequate. Now, the form of the opinion. We're talking about the form of the opinion in this case. The second paragraph talks about the form of the opinion. So the form of the opinion would be qualified, except for or adverse. It could be either qualified except for or an adverse opinion. One of this. This depends on again the auditor's judgment of the matter's persiveness to the financial statements, whether it is perceived or not. Based on that only you can say whether it is qualified except for or adverse opinion. But it should not be unmodified. Okay, that's very clear. So in this case, what are you doing? In this case means referring to the case study. It looks like that adverse may be more appropriate. This would be an appropriate form of audit opinion. Why? Because given that the disclosure note is short, if it was in detail, okay, you can say qualified except for, but in this case disclosure note is short, so adverse opinion looks more suitable. And that management may appear to be negate the significance of the uncertainties by stating that they are very confident. You see, they're hiding it. They're hiding the significance of uncertainties by showing that they're very confident that they will be successful in the tender process. So all this makes it more suitable that an adverse opinion should be used. A full description of the status of the tender negotiation as of the date of the auditor's report and their potential impact on the financial statements should then be detailed. Where? Where should it be detailed if it's an adverse opinion? Basis for qualified or adverse opinion paragraph. If it's an adverse opinion, you have to say that this is the basis for the adverse opinion. In that paragraph, you have to write the full description of it. What are the tender negotiations? What are the impact on the financial statements? So third paragraph. What does third paragraph talks about? They are talking about KM. Okay. So however, if on the other hand, if it is adequate, here you're talking about if the disclosures are not adequate. Here you're talking about what if they adequate, the disclosures. So however, if on the other hand, the outcome of the auditor's assessment is that the client's financial statement disclosures are considered by the auditor to be appropriate. That means the disclosures are appropriate. The auditor has told that the disclosures are appropriate after they have assessed. Then the material uncertainty in relation to the going concern should be disclosed where? In a separate section known as material uncertainties relating to going concern. And this should appear immediately below the basis for opinion paragraph and not in the key audit matters. Not in the key audit matters section of the auditor's report. So according to ISA's 570, because this deals with material uncertainty related to going concern, what should you do? should draw attention to the note in the financial statements which discloses the going concern issue. If anything is there regarding going concern issue and you're disclosing it, you have to draw attention to that note in the financial statements. You cannot just keep it as it like that, because it's very important. And state that these events or conditions indicate that a material uncertainty exists, which may cause significant doubt on the entity's ability to continue as a going concern, and that the auditor's opinion is not modified in the respect of the matter. Okay. Now we are linking this to the intangible assets and all, because this is regarded to the purchase customer list. So MAT is a listed entity now, number 1, and according to ISS 701, that means communicating the key audit matters in the independent auditor's report. These disclosures are required in the auditor's report for high risk areas. Number 1, it is a listed entity. Okay. So this section, when do you write it? When it's an area of high risk, or it's an area where significant judgments are used, and also the effect of significant events or transaction which occurred during the period. Okay, now you're linking this to what? The customer list. So you have to link this to the customer list. So the assessment of the useful life of the customer list is indefinite, isn't it? And management's conclusion that the intangible assets are not impaired are areas of both significant judgment as well as high risk given their materiality. You see? Did you see? You are linking this to the customer list. Because to say that it is indefinite, the useful life, intangible assets are not impaired. Both to conclude, you need significant judgment as well as their high risk areas. And also they are very material. That's why the auditor should consider disclosing these matters in this section only, KAM. Also, after taking this into the consideration, let's talk about the inconsistencies. If the inconsistencies between the chairman's performance review and the financial statements are not resolved, that means still there are inconsistencies between these two. Okay, you have discussed this with the client, but still it is not resolved. What should you do? Where should I disclose this? They should be disclosed in the other information section of the auditor's report. After it's not resolved also, then it comes under other information. Okay, there's a section in the auditor's report which is known as other information. Then it should be disclosed under that. Okay. So that's it for question number 3 of March June 2021. And I hope that this is the last video, right, on the audit where I've been discussing a past paper to show you how to answer a question, a 25 marks question as well as a 50 marks question. So I have uploaded the previous 2 questions, also question number 1 and 2. So make sure that you watch those as well to get a better understanding of the March June 2021. So this shall help you in your September paper as well. So that's it. Take care and see you in the next video.